Welcome back to Investing Talk Podcast. Okay, so today we are looking at Richtech Robotics.
Right.
You sent over just a ton of info about them, and it seems like they're really trying to automate all those labor-intensive jobs,
Yeah.
lots in the hospitality industry.
Mm-hmm.
So our goal today is to just kind of go through all this stuff
Yeah.
and pull out like the important insights.
Right.
What do we really need to know? So, we have some overviews of the company.
Ah.
How's the stock been doing?
Right.
What's their financial health look like?
Sure.
And even some thoughts from the experts.
Okay.
So let's just kind of dive in and see what's going on with Richtech Robotics.
Yeah. So, one of the most interesting things to me is just how focused they are.
Okay.
So they were founded in 2016,
Okay.
really all about these advanced robotic technologies.
Mm-hmm.
And they're laser focused on industries like hospitality,
Okay.
places where there's a lot of repetitive tasks
Makes sense.
that could be automated.
Hmm.
So they're building, and they're selling these robots
Yeah.
for a bunch of stuff.
Yeah.
Moving things around indoors, handling deliveries,
Mm-hmm.
sanitation, food and beverage automation.
Yeah. They have got an impressive lineup
Yeah,
of robots.
they do.
It's like Atom, Scorpion, Matrady, Medbot, Titan, Skylark, DSTE. It's
Yeah.
like a whole robot army
It's a full-fledged
to help us out.
workforce.
And it seems like the big theme here
Uh-huh.
is autonomous mobile robots,
Yeah,
these AMRs.
right.
So these aren't just robots stuck in one place. They
Yeah.
can move around.
Yeah.
They can get stuff done on their own.
They're designed to navigate complex environments
Okay.
and make decisions on the fly.
So that's really, it puts them right in the middle of
Yeah.
robotics and AI.
The intersection of robotics and AI, exactly.
Yeah.
And that, that's a big differentiator
Okay.
from, some of the older automation technologies.
Right. Those are more fixed, and these are much more adaptable.
Yeah. They can learn, they can adapt, they can handle new situations.
So now let's talk about the stock.
Okay.
It's been a little while.
It has been a bit of a roller coaster ride.
Yeah.
Yeah.
So back on January 23rd
Uh-huh.
of this year, we saw a nice little jump,
Yeah.
7.67%.
Huh.
And that was driven by...
New strategic partnerships.
Okay.
Advancements in their AI technology.
So, those kinds of things, new collaborations,
Yeah.
technological breakthroughs,
Yeah.
those tend to,
Inject optimism into the market.
inject some optimism, get people excited.
Exactly.
Yeah.
Yeah. It signals potential
Mm-hmm.
for future growth.
But then, just a couple weeks before that, on January 7th,
Oh, yeah.
stock drops 4.87%.
Yeah.
And the reason cited was concerns about financial stability.
Right. So you have this kind of push and pull between excitement about the technology
Right.
and worries about their financial footing.
So it's like a good news, bad news kind of situation.
Exactly.
And if we look at the past 6 months,
Uh-huh.
it's been kind of up and down, but overall a downward trend.
Yeah. There have been some significant fluctuations, but generally it's been heading south.
Yeah. And then if we zoom out to the whole past year,
Right.
it's down about 29.63%.
Yeah, that's a pretty substantial decline.
Yeah. So that suggests that the market has some real questions about Richtech's future.
It does. And I think that year-long decline really underscores the challenges they've been facing.
Yeah.
It's just that the market is really concerned about their financial situation.
Okay.
Maybe some other things we'll get into.
Right.
And that's outweighing the excitement around their technology.
Yeah.
At least for now.
So let's get into those financials a little bit more.
Okay.
So their revenue for 2024 was $4.24 million, which is a pretty big drop.
Yeah, that's more than a 50% decrease from the 8.76 they brought in during 2023.
Yeah, over 50% down from 2023.
That's a big step backwards.
That's a big red flag. So what's going on there?
Well, a decrease like that could point to a lot of different things.
Okay.
It could be slowing sales,
Uh-huh.
increased competition,
Okay.
maybe even a shift in their business model.
Right.
So understanding what's driving that revenue decline is going to be key to understanding
Right.
their future.
And their net loss in 2024 was 8.14,
Yeah.
which is way worse
Way worse than the previous year.
than the year before.
Not a good time for investors.
Yeah, not a good sign. And earnings per share over the trailing 12 months are negative.
Negative 0.11.
So they're not just making less money,
Right.
they're actually losing more.
Yeah, these numbers really highlight the imbalance between their income and their spending.
Right.
Their costs are way higher than their revenue.
Yeah.
And that can't go on forever.
So they do have a cash reserve of 9.201.
Yeah.
which sounds okay at first.
Yeah, on the surface.
But they also have challenges with short-term debt
Right.
and their ongoing expenses.
So that cash might be disappearing faster than they'd like.
Right.
It does give them some breathing room.
Right.
But that short-term debt, combined with those losses,
Yeah.
puts them in a tough spot.
So it seems like we've got a company with some really exciting technology,
Yeah.
but a kind of shaky financial foundation.
It's a bit of a mixed bag, isn't it?
Yeah. So what are the strengths here?
Well, the sources point to those strategic partnerships.
Uh-huh.
That we mentioned the progress they're making in AI and some really innovative products.
Okay.
Like the Scorpion and the Adam robots.
Okay, so the partnerships could be really valuable.
Right. They can open up new markets,
Yeah.
give them credibility.
Okay.
And those AI advancements are what make their robots smarter, more appealing to customers.
Right.
And products like the Scorpion,
Uh-huh.
which might be focused on security inspection,
Okay.
and Adam,
Yeah.
which is probably a more versatile service robot, those showcase their innovation.
But then there are the red flags.
Right on the other side of the equation, you have those significant net losses.
Uh-huh.
The fact that their expenses are so much higher than their revenue.
Right.
Those concerns about their overall financial stability.
So it's kind of a tug of war.
It really is a balancing act. The strengths represent potential,
Yeah.
but those weaknesses
Yeah.
are serious obstacles.
Now, what are the experts saying about all this?
Well, the average analyst rating is a buy,
A buy, okay.
with a target price of $3.
So that's pretty optimistic.
It does sound optimistic, especially considering the financial challenges.
Right.
But you have to remember,
Okay.
these ratings are based on projections.
Yeah.
They're not guarantees.
And public opinion seems to be pretty mixed,
Yeah.
which isn't surprising.
Yeah, you got the excitement about the technology,
Right.
but people are worried about,
Whether they can actually make money.
right, can they make money?
Exactly.
Now, we don't have specific social media data.
From places like X or Reddit, but my guess is it would be the same kind of split.
Yeah, I think that's a fair assumption.
Okay, so who are they competing with in this robotic space?
So you have companies like UiPath.
Uh-huh.
They're more focused on software automation.
Okay.
And then you have iRobot,
Yeah,
known for their consumer robots.
like the Roombas.
Exactly.
And Richtech seems to be focused on this niche of service robots.
Yeah, that's a really important distinction.
Okay.
You know, while they all fall under the umbrella of robotics,
Yeah.
their focus is quite different.
Okay.
UiPath is helping businesses automate tasks on their computers.
Uh-huh.
iRobot is cleaning your floors at home,
Yeah.
and Richtech is aiming to automate those physical tasks
Okay.
in places like restaurants and hospitals.
So that focus could be their edge.
It could be.
But, they don't have the financial stability of these bigger companies.
Right. That's a challenge.
It's tough to compete when you have fewer resources.
Yeah, scale and financial strength give you a lot of advantages.
So looking ahead, what are some things that could really affect their stock price?
So their earnings report
Okay.
coming out on May 14th, 2025.
Earnings report. Okay.
That's definitely one to watch.
Uh-huh.
And any new partnerships they might announce.
Okay.
Those are always key.
So the earnings report is important because it shows whether they're actually improving their finances.
Right. And a good earnings report
Yeah.
could boost investor confidence.
Right.
And new partnerships can validate their technology, create new revenue streams.
Okay.
So those are the positives to watch for.
Of course, there are also risks.
Of course, there are always risks.
Yeah.
The overall market conditions, any changes in government regulations
Okay.
affecting the robotics industry,
Right.
and, of course, the competition.
Right.
We talked about that.
So now let's look at some of the more recent developments.
Okay.
So they participated in ProWein 2025, showcasing their robots for the wine and spirits industry.
Yeah, that sounds like a good move.
Yeah.
To expand globally.
Yeah. Going after specific industries.
Exactly.
Seems smart.
The wine and spirits industry has some unique needs
Okay.
where automation can be really helpful.
And they also partnered with Ghost Kitchens America in Peachtree City, Georgia.
Okay.
To use their robots in a new restaurant.
That's great because it's a real-world application.
Yeah.
You're seeing the technology in action.
Not just like, on paper.
Exactly. It's not just theoretical anymore.
Right.
It's tangible.
And it looks like they're expanding into healthcare, too,
Oh, wow.
with agreements for multi-unit deployments in hospitals.
Healthcare is a huge market.
Huge.
And there's a huge need for efficiency and automation.
Yeah.
So if they can succeed there, that could be a big deal.
And their stock price has been moving around a lot lately.
It has.
It jumped 11.95% on March 24th.
Uh-huh.
and then dropped 8.8% just 2 days later.
Yeah, that really shows you how volatile it is.
It does.
Go up and down really quickly.
And Lake Street initiated coverage with a buy rating and a $3 price target.
So that's another positive sign.
Yeah.
When a new analyst starts covering a company,
Yeah.
especially with a positive rating,
Yeah.
it can attract new investors.
So shifting to the bigger industry trends,
Okay.
it seems like AI is going to really drive demand for robots.
It is. AI is making robots more capable,
Uh-huh.
more attractive to a lot of industries.
But there's also this mention of declining demand for service robots specifically.
Yeah, so that might seem contradictory,
It does.
but I think it reflects how complex this market is.
Okay.
So while AI is boosting robots overall,
Uh-huh.
there might be specific segments within service robotics
Right.
that are facing challenges,
Okay.
maybe due to the economy or other factors.
So it's important to see exactly where Richtech fits in. The sources also say that Richtech might have an advantage when it comes to efficiency and sustainability.
Yeah, those are becoming really important
Yeah.
for a lot of businesses.
So if Richtech can offer cost savings through efficiency
Right.
and be more environmentally friendly,
Yeah,
that's a big selling point.
absolutely.
And there's potential for new legislation promoting robotics research,
That's interesting.
which could help create a better regulatory environment.
Yeah, government support for R&D can be really important
Yeah.
for these emerging tech sectors.
So looking at overall investor sentiment, it's a mix of optimism about AI,
Uh-huh.
but caution about Richtech's financials.
Yeah, that's a pretty rational assessment
Yeah.
based on what we've seen.
Okay, so let's dig even deeper into their financials.
Okay.
Looking at Q1 of 2025,
Right.
their revenue was $1.257 million,
Okay.
which is a 14% increase
That's a good sign.
compared to Q1 of 2023.
Yeah, revenue growth is encouraging.
So it seems like maybe some of their efforts, like the robots as a service model
Uh-huh.
and the new products, are starting to work.
Yeah, it suggests that those initiatives are gaining traction.
And their Q4 2024 revenue was $4.24 million.
Okay.
So it seems like they're really pushing that subscription-based robots as a service model.
Yeah, that makes sense.
And they're also launching new products to boost revenue.
That's smart.
Now, their earnings per share for Q1 2025, both basic and diluted, were negative 0.04,
Okay.
which is the same as Q1 2023, even though their net loss was bigger.
Yeah, that seems strange.
It does.
But it probably means they have more shares outstanding now.
Okay.
So the loss is spread out over more shares,
I see.
making the per share impact look the same.
So their price to earnings ratio isn't available because they haven't had positive earnings.
Right.
And the stock is considered overvalued based on its intrinsic value.
Yeah, if a company isn't making profits,
Right.
the PE ratio isn't very helpful.
And overvalued based on intrinsic value suggests.
That the current price might be too high
Right.
compared to what the company's actually worth.
But on the plus side, their debt to equity ratio is low.
Oh, okay.
And they have a strong equity position.
So that's good.
Yeah.
It means they haven't borrowed a lot of money
Right.
to finance their operations,
But their free cash flow is negative.
meaning they're spending more than they're bringing in,
Right.
which is probably because of all the investments they're making.
Yeah, all those strategic initiatives.
Exactly.
Now, negative free cash flow isn't always a bad thing,
Right.
especially if those investments pay off later.
It's something to keep an eye on, though.
Right.
Make sure they don't run out of cash
And finally, the return on equity isn't available.
because of the negative net income.
Yeah,
And their profitability score is only 25 out of 100.
which really shows just how tough things are financially.
Yeah, it emphasizes those financial hurdles.
So, beyond just cool robots,
Uh,
what makes Richtech stand out?
I think their focus on AI-driven robotics is key.
Okay.
It allows their robots to do more,
Uh-huh.
be more adaptable
Okay.
than simpler robots.
Right.
And their unique products, like ADAM and their air arm worker robots,
Uh-huh.
suggest they're filling specific needs in the market.
And that robots as a service model could be a real advantage.
Right, both for customers and for their revenue.
Okay, so where do they fit in the overall market?
I'd say they're a challenger,
Okay.
not one of the big established players.
Right.
So they have to be strategic.
Right.
They're using partnerships to grow,
Mm-hmm.
and their AI expertise to stand out.
Okay, so Just to kind of recap the key industry trends.
Yeah.
Growth is being driven by technology,
Uh-huh.
the demand for automation,
Right.
and these strategic partnerships.
Those are the big drivers.
But of course, there are risks.
Always risks.
Regulations, competition, supply chains.
Right. Those are all factors that could affect rich tech's success.
Okay, so let's talk about valuation. Their price-to-book ratio is pretty high,
Around 6.08.
which again suggests that they might be overvalued.
It could mean that investors are really optimistic
Mm-hmm.
about their future growth,
Okay.
but it could also mean the price is too high
Right.
based on their current assets,
They don't offer a dividend.
which is normal for a growth-focused company.
Yeah.
They're probably reinvesting everything back into the business.
And as we've seen, the stock is pretty volatile.
Yeah, it's been moving up and down a lot.
And their SEC filings highlight some major risks, like
Wow.
competition,
Right.
operational challenges as they grow,
Uh-huh.
and the risks that come with their investments.
Those are all important to consider.
So taking all of this into account,
Uh-huh.
the recommendation seems to be hold,
Yeah, hold seems like the most prudent advice right now.
proceed with caution
Right.
due to the financial instability and the competition.
It's a mixed picture.
Yeah.
Lots of potential,
Uh-huh.
but also some real risks.
So monitoring their earnings and their partnerships is
Okay.
going to be key.
Absolutely.
So, looking at all this information about Richtech Robotics, it is a really interesting case.
It is.
They have some promising technology.
Mhm.
We see that in their products, their expansions.
Right.
But their finances are complex.
They are.
And it's a bit of a mixed bag.
Definitely.
So, what stands out to you most from all this? What questions do you have? It really makes you think about how you balance the potential of AI and robotics
Uh-huh.
with these financial hurdles.
Yeah.
Thanks for sending this over. And if you found this discussion helpful, please subscribe to the podcast, give us a like, and leave a comment with your thoughts.